5 a.m. in New York City. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Countdown to CPI. Stocks steady after hitting records ahead of a key inflation data print. 3 rate cuts almost fully priced in now for this year. From tariff impacts to competition with China, don't miss our exclusive interview with UBS CEO Sergio Ermotti. And the search continues. A manhunt underway after the FBI releases someone who had been a person of interest in the killing of Trump ally Charlie Kirk. So let's get to those markets then. Futures are pointed higher, a little halo effect after Oracle surged 36% in yesterday's trading. Of course, Oracle not in the Nasdaq nor the Nasdaq 100, but that index did eke out the most fractional of gains to a record thanks to the halo effect that Oracle had. As we're saying, pricing now indicates that we're expecting almost 3, if not 3, cuts this year. Investors clearly pricing for the Fed to spur growth as opposed to deny inflation, if you like. So S&P futures, Nasdaq futures, all higher. Bloomberg dollar index just fractionally higher as well. If you look at yields, we're seeing a slight undoing of that curve steepening once again today. The long end just a moment ago was below 470, and we have the 2-year yield just a little bit higher, close to 355 as well. Of course, we're all just waiting for that 8:30 CPI print. I do want to also acknowledge that today is September 11th. It is the 24th anniversary of 9/11. We will be remembering all day long, as well as along with the exchanges, observing those moments of silence. All right, let's get to London now to look at some individual market movers. Here's Valerie Teitel. Valerie.
Good morning, Vonnie. Let's start with a check on Oracle, because that 36% surge of yesterday's session doesn't stop there, adding another 1.5% so far in pre-market trade. The surge yesterday was enough to catapult the co-founder, Larry Ellison, to be the world's richest man for a short amount of time. But the one of the biggest jumps in wealth recorded from the Bloomberg Rich Index. The Wall Street Journal also reported yesterday that one of those splashy cloud agreements that it had signed was with OpenAI, totaling $300 billion, one of the largest signed in the cloud sphere. Moving on to Klarna, the IPO yesterday that surged as much as 43%. We are seeing it fall into the red in pre-market trade, just down less than 1%. This is the buy now, pay later company that had a splashy IPO yesterday, one of the biggest of the year, and valued the company at $17 billion. Perhaps a few days of good trading for this stock could show that the IPO market does have more room to run in the U.S. Lastly, let's end with the retail frenzy. Open Door Technologies absolutely surging in pre-market, up 28%. This comes after the co-founders will return to the board, and the company is hiring a new CEO taken from Shopify. But this stock really did light off a retail frenzy last time it moved this much. That's Open Door up 28%. Vonnie.
All right, Valerie, thank you so much, Valerie Teitel there. And later in the show, we'll push ahead to CPI with Seema Shah of Principal Asset Management. So, cooler than expected PPI, further cementing a Fed rate cut next week. Investors now turn to CPI, coming out, of course, at 8:30 a.m. Eastern Time. For more, let's bring in Ven Ram, cross-asset strategist for Bloomberg News. So, Ven, what exactly is at stake then in today's data?
Morning, Moni. I think there's plenty at stake. Very specifically, the Fed's dot plot is at stake. In June, if you remember, the Fed had outlined 2 rate cuts this year. Now the markets are leaning, as you were saying earlier, towards 3 rate cuts. They are not fully factored in 3 rate cuts yet, mind you. They're thinking 2 and a bit more. So I think that today's print is going to be crucial for that particular calculus. If the CPI print confirms what we got with the PPI print yesterday, of prices actually falling, or even a slower rate of inflation than the markets have penciled in, I think that will cement hopes for 3 rate cuts from here. And that will mean that, the Fed will be on a par with what the Taylor rule rate is saying, about 375 thereabouts, or perhaps even lower, depending on the inflation print that we get today.
Then, what if it doesn't? Each data point, it seems like, has been very confusing and has surprised the market. What if we get a surprise and hotter than expected inflation today?
Well, I think that's a great question. I think that if we get, say, a 3% inflation print, that will probably pull the market back from leaning towards 3 rate cuts. But the big picture in the economy, Vonnie, is one of a softening economy. Whether you look at the ISM manufacturing report, whether you look at the Jolts market report, whether you look at the non-farm payrolls report, the momentum definitely has shifted to a lower gear. And I think that will keep the Fed comfortable with 2 rate cuts that it had already penciled in based on the metrics that they had estimated earlier in the year. So I don't think we are going to be in a position where all the Fed rate cuts are derailed. It's specifically the third one is in question. And if the number points to an acceleration, as you say, then the third rate cut will be priced out of the market.
Van, gold has been on a stunning run this year, but if in fact we're sort of getting some answers to our questions now and the rate cutting cycle begins, is that rise sustainable?
Well, I think that for the rate cuts, for the reason of further rate cuts and possibly a very dovish Fed chair succeeding Powell, I think that gold has got that momentum, and it is overvalued. It is overvalued specifically by 23% on my model that takes into account inflation, the dollar's value, and central bank purchases. Now, if you look at the central bank purchases and inflation, I think that gold has probably got the momentum to take it towards 3.8, 3.9 thereabouts. But I think some of the calls on gold have been very bullish, and some of it probably too outlandish in my opinion. $5,000. I don't think it's going to get there anytime soon. Over the longer term, very long term, that's possible, of course. But in the short term, I think that it may top out around 3.8, 3.9.
All right, we're topping 3,600 today. Van Ram, thank you so much. Over in Europe, meanwhile, the ECB widely expected to leave interest rates on hold at its meeting today. Bloomberg's Lizzie Burden joins us now from Frankfurt. So, Lizzie, a hold obviously on the cards. What exactly is the ECB weighing up? Has it achieved that soft landing?
Well, maybe, Vonnie, and it looks like that US CPI print that you were discussing with Ven could do more to move the euro than anything that happens in Frankfurt today, because it drops right between the decision and the press conference. And as you say, a hold is what is expected because, according to President Lagarde, the euro area economy is in a good place. We've got inflation at 2.1%. They've just revised Q2 GDP up. You've got unemployment at a historic low. And so it's quietened the concerns of the doves on the Governing Council, and economists don't see any more cuts. In fact, markets see a 1 in 3 chance, less than, of another cut this year. We may be actually seeing the next move being a hike. Let's see if Christine Lagarde gives any hints on that at the press conference. I expect she will be tight-lipped. But we could look to the forecasts for clues here, because this is the first set of forecasts since that US-EU trade deal was reached. And 15% tariffs are the midpoint between the base scenario and the severe scenario that they had set out. Yes, having a trade deal, Vonnie, alleviates some of the uncertainty, but nonetheless, tariffs are likely to weigh on demand. So you could see the forecasts revised up in the short term, but down over the longer term. Now, there may be also some fireworks in the press conference, because you'll know that President Lagarde was once the French finance minister. So I'm sure she'll be asked, would the ECB intervene if that oats-bunch spread were to widen on the French political risk? I'm sure she will say she doesn't want to wade into domestic politics. It's for member states to be fiscally responsible. But you'll recall she did once say it isn't the ECB's job to close spreads. But that conversation could come up again by talking about the euro. We know that it has barely budged off the French political risks, but it's been climbing towards $1.20 on the potential divergence between the Fed and the ECB. And that, of course, weighs on the disinflationary side of the ECB's ledger.
Lizzie Burden in Frankfurt, thank you so much. Turning to trade now, Mexico planning to impose as much as a 50% tariff on cars and other Chinese products to align more with US protectionism. For more, let's bring in Bloomberg's Brendan Murray, who tracks global trade for us. So, Brendan, the latest on these potential duties, is it just China, just cars?
Well, it's going to be more than just China. It's going to be a host of other countries that Mexico is going to impose this tariff on. This is really the Mexican government thinking ahead to 2026, when there's going to be a renegotiation of the USMCA agreement, and they are apparently trying to align themselves with what Canada and the US do with Chinese-made vehicles, and that's basically slap a prohibitive tariff on them and prevent those those products from entering their markets. So the Canada, the U.S., and Mexico, those auto supply chains are very much that stretch across the three economies, and that Mexico doesn't want to be seen as being a backdoor for low-priced Chinese EVs that compete with those made north of the border. So this is just another example of how protectionism kind of feeds on itself, particularly among trading partners like Mexico, the U.S., and Canada.
Brendan, what exactly is going on with India? Officials there say a team of U.S. defense diplomats and Boeing executives are visiting.
Yeah, they're trying to keep that trade negotiation for an agreement on track. And one of the big issues for the U.S. is that India buys a lot of defense military gear from Russia, and the U.S. wants to sell more of that to India. It's been a topic of this conversations for months now, and so it would appear that that as part of those negotiations, India will make some pledges to purchase American made items, and some of those could be defense products, and that's. But there's a long way to go yet. President Trump and Modi have had a falling out of late. They sort of patched things up in recent days, but the two countries are really trying to hold this fragile ceasefire in the rhetoric together and try to get closer to a trade agreement that for a while there was at the lead of the pack, and now it's up in the air.
Well, and then moving to a third trade theatre, if you like, China and the US top envoys, including Defense Secretary Hegseth, held talks yesterday. Does that have any read-through to trade?
Yeah, exactly. I mean, the big goal here is for President Trump. It's a summit with his counterpart in China, President Xi, and the U.S. and China have this series of talks that they're meeting about every 3 months. They're trying to minimize the amount of disruption between the two economies while they de-risk from each other, and this is just one of those dialogues that have to happen for everything to line up for these two leaders to meet. There's some speculation it could happen before the end of the year, but we don't really know. There's still a lot to do diplomatically between now and then.
Brendan, thank you so much. That is Brendan Murray. Now back to the top story overnight. A manhunt still underway for the killer of Turning Point USA founder Charlie Kirk. Kirk was fatally shot during an event at a university in Utah. Kirk, an ally, of course, of President Donald Trump, who himself spoke yesterday after the incident.
It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree day after day, year after year, in the most hateful and despicable way possible.
For more, we're joined by Bloomberg's Rosalind Matheson. Ros, how significant was Kirk to Trump? What might be the repercussions of Kirk's killing?
Well, he mattered quite a bit to Donald Trump. He was very loyal to Trump, even after 2020, and he repeated often Donald Trump's claims that the election was stolen. And arguably, when other Republicans edged away from Trump in those intervening years, and the sense that was Donald Trump not going to be able to mount a campaign for 2024, Kirk very much stood by him. And Donald Trump remembers that, and he mobilized the machinery of his organization as it grew. This is an organization that wasn't just about college campuses. It was also about coming into high schools and really energizing young people in America towards conservative values and conservative politics. And he had a lot of success there. He had millions of followers on social media, a big podcast, and he was famous for his willingness to debate anybody, those who disagreed with me. And so not just going into the echo chamber of those who already agreed with his views. And you can see Donald Trump has praised him repeatedly and saying at a grassroots level, he feels that he really helped him get elected to some extent in 2024. Of course, you know, again, in this era, does having TV ads, newspaper ads for politics really work, or is it back at that grassroots level? And that's where Kirk really mattered to Donald Trump, and possibly, you know, would have mattered quite a lot to in the next round, which is the midterms that are coming up.
Roz, it's been, 12 hours now since the shooting. What do we know about what authorities know at this point?
Well, we know that authorities were looking at 2 people, and they say they did detain some people initially on suspicion of being involved, and those people have been released. They don't seem to have any link to what's happening. So right now what we know is they're still searching for the person who was behind this, for the shooter. And there's no sense of who that person was or what their motivation may have been. But you can see quickly, again, this is going to start to feed into the political discourse in the US. Donald Trump, saying that the radical left, as he calls it, has demonized Kirk and his beliefs and demonized his views, and therefore created an environment potentially for something like this to happen. And so you can see this is only going to feed into an even more hardened discourse in the US going forward.
Roz Matheson, thank you so much for joining us. Now, on to other top stories trending on the terminal this morning. Alibaba is leading a fundraising spree among Chinese tech giants driven by soaring capital demands and AI competition. The company is seeking to raise about $3.2 billion in an offering of zero-coupon convertible notes that's set to be the year's biggest. Used car seller and subprime lender Tricolor has filed to liquidate in bankruptcy. It didn't give a reason for its collapse in its filing. US prosecutors are also looking into allegations of fraud by the company. South Korea's president said a US immigration raid that led to the detention of more than 300 South Korean workers has unsettled companies pouring billions into the United States. The workers were dispatched on short-term stays to install equipment and got caught up in a raid last week at a battery plant under construction in Georgia. The workers have been released and are scheduled to fly back to South Korea. Coming up, we hear exclusively from UBS CEO Sergio Ermotti on why shrinking the bank is not an option. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now to a Bloomberg exclusive. UBS CEO Sergio Ermotti spoke on President Trump's tariffs impact and in a wide-ranging interview on lots of other topics with Bloomberg's David Inglis. Let's have a listen.
It's fair to say that also this time probably there is an exaggeration of the estimation, but is going faster than what we saw in the past. But I'm pretty convinced that we are still underestimating the impact it will have over the long term. I think that for us is all about really preparing for the future. The biggest focus we have right now is how to make our processes more efficient on the back end, but also how can we help our client advisors serving their clients in a more effective and efficient way, our analysts to be more responsive to market changes. And, one point is very important. Technology will help humans being better. And in banking, we will continue to see the emotional part, the EQ part of the equation playing also a very important role.
The bank has been around through many cycles. I want to get your sense of this current macro environment. I mean, we went into this year with some expectations around how the macro environment would change. And then we had this flurry of tariffs and this back and forth, and now questions around how much the Fed can, in fact, lower interest rates. What's your sense of the global economy, and where do you think we will be in 6 months' time? Are we going to be better off or worse off?
Well, look, the issue is that I don't think we have seen really the true impact of tariffs playing out in the economies. Of course, when you look at Asia and China in particular, it's fairly robust. 5%, comfortably about 5% GDP is quite a strong momentum. And, of course, also China may be impacted by high tariffs. But on the current assumptions, around 40%, considering also that the weighting of tariffs for exporter has changed. In 2017 was probably around 20% of the exports were going to the U.S. Now we are closer to 14%. Of course, when you look at machinery, autos, and technology, there is between 40 and 80%. But what's going on, for example, in this region, diversification, it's a very important topic. So you see Asian becoming much more, developing more into a diversified play. Same is going on for in Europe. The true issue on tariffs will be seen on consumers. In the U.S., we will need to see exactly if there is an inflationary aspect of tariffs.
When you speak to your big corporate clients, do you get a sense that people are more conservative still in terms of their assumptions, their capex spending, and just their broad expectations of how things will play out?
Well, I think that there is still a level of uncertainty, although if you look at the world seems to be divided into two, the more traditional, let's call it, economy, and the one that is AI, technology-driven. There is a clear boom and prospect for growth. We see it here in Hong Kong with the booming IPO market. This is something that we saw in the best times.
Right.
But in general, there is a constructive momentum, but the jury's out because the complexity is not only the economics, it's also the very complex geopolitical environment. Is keeping all of us very focused on making sure that we are not becoming complacent.
Right, and there's this renewed, let's put it, a healthy competition coming from some of your Chinese peers in the industry. Do you get a sense that the competition now is a bit more fierce, and how are you prepared to respond to all? How is UBS prepared to respond to this new regime?
Well, I don't remember in my career times in which competition wasn't fierce, Look, I think that it's good to see that also Chinese securities firms and banks are broadening up their capabilities. We see us as a complementary player in that sense. So we are helping international investors that want to invest in China and in Asia, and also the other way around. And this is very complementary with the rest of the industry and the competitive landscape.
That was our exclusive interview with UBS CEO Sergio Ermotti. Now let's take a look at where we stand markets-wise as we head towards the CPI print, also the ECB decision and news conference from President Christine Lagarde. Now we are seeing a positive inflection in futures, S&P futures there, as you can see in the green. The Nasdaq 100, it should be mentioned, did fractionally eke out a record yesterday. Of course, Oracle's 36% rise in the session helped things. Not that Oracle is a member of the Nasdaq, but at the same time, that halo effect was definitely in place. Now, as you can see, the markets are repricing to some extent after the PPI data yesterday showed perhaps more benign inflation for consumers, if not for producers and manufacturers, margins getting squeezed. But you are seeing the potential for a third rate cut this year now being priced in. Gold futures also coming off their high, down a good 0.7% right there. Still above 3,600, as you can see, though. And the 10-year yield there at 4.05, a tiny bit of curve flattening today. I do want to point out as well, European yields. Look at that French 10-year and Italian 10-year within a half basis point of each other. That German 10-year yield to 66. Time now for your front page news. And on the front page of major U.S. newspapers, the fatal shooting of conservative activist Charlie Kirk. The founder of Turning Point USA played a central role in organizing young voters and giving shape to the pro-Trump agenda. Charlie had just taken the stage at an event at Utah Valley University when he was shot in the neck. A search still underway for the killer. President Trump issued a social media post announcing Kirk's death. He called for flags to be lowered to half staff in honor of what he called a truly great American patriot. Former Democratic Presidents Joe Biden and Barack Obama denounced the violence and offered sympathies to his family. Kirk was 31 years old and a married father of 2. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Countdown to CPI. Stocks steady after hitting record highs ahead of a key inflation print. 3 rate cuts now almost fully priced in for this year. From deal flows to consumer resilience, don't miss our exclusive interview with Citi CEO Jane Fraser. And the search continues. A manhunt underway after the FBI releases someone who had been a person of interest in the killing of Trump ally Charlie Kirk. So let's take a look at those markets now. Futures pointing to slight gains at the open. Of course, the halo effect of Oracle's 36% rise impacting markets no doubt today too. Also perhaps the expectation for a more benign CPI print potentially after yesterday's PPI data yesterday. So again, we have Russell 2000 futures down 0.1%. However, the Russell just the laggard once again. Not happening with the dollar index, not too busy today. We've got a lot of events, a lot of catalysts coming up in the 8 o'clock hour, but we do see a tiny little bit of curve flattening again today with that 30-year yield below 470. That 2-year yield, though, still at 355. Let's get to some individual stocks to watch now over in London. Here's Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with a check on Oracle. After its 36% surge in the session yesterday, it is trading higher in pre-market, up another 1.5% for this database company. The Wall Street Journal reporting that one of the splashy customer arrangements it had made was with OpenAI, a $300 billion deal, Ivani, over the next 5 years, promising computing power equal to 2 times the output of the Hoover Dam. Let's move on to IPO action with Klarna, one of the biggest IPOs of the year, and those shares are trading in the red, down 1.8%. They are trading above their IPO price of $40 a share that valued the company at $17 billion. There was a frenzy yesterday in this share. Vonnie, it surged as much as 43%, closing up 15% by the end of the session for this buy now, pay later company. Lastly, let's check on Opendoor. This is the stock that ignited a meme stock frenzy earlier this year, up 27, nearly 28%. They named their founders to return to the board and named a new CEO that they are taking from Shopify. Bonnie.
Valerie, thank you so much. Valerie Teitel there in London. So we're just 3 hours away now from CPI after a weaker than expected PPI report underpinning Fed rate cut hopes for next week. Joining us now is Seema Shah, Chief Global Strategist at Principal. Seema, what did you make of the PPI data? Because I know that you had thought that perhaps the inflation ogre wasn't exactly slayed just yet.
Hi. Yeah, I think the PPI print, it was an interesting one. If anything to us, though, it reinforced the notion that maybe rate cuts are certainly required. What you saw from the data just suggested that there is more, producers, retailers are having to eat some of those margins. Now, profit margins have been really, really strong, so it's not a concern at this point. But if you're seeing that pressure, then certainly there is that additional need for the Fed to cut. And of course, if it's unlikely to be reaching through to the PCE numbers, then there's very little to stop the Fed from cutting rates. But of course, we have to see what the CPI print holds today.
And also, it's not just really a question anymore of cutting by 25 basis points. It's whether the Fed decides to cut more and what kind of language comes out of next week's meeting to direct the market forward guidance, if you like. So I'm curious if you think that the Fed thinks it needs to do more than just give us, a plain vanilla 25 cut.
I think it would be quite unusual for it to cut by 50 basis points. Typically, you only see that kind of move in something of an emergency situation when recession indicators are really flagging. We're not seeing that. Of course, the labour market data has been slowing. But if you look at the breadth of all the other economic activity indicators, it does suggest, yes, a slowing economy, but certainly nothing which is approaching recession. I think what we're more likely to see, particularly given that the inflation picture over the next 6 months is still quite cloudy, is that the Fed could indicate that we could see a sequence of cuts, certainly from our perspective. 3 cuts this year, September, October and December is the most likely scenario.
You say inflation calm is unlikely to last. How does that manifest in markets, particularly if we get a hotter print today?
Well, I think the hurdle for a rate cut next week is very, very high. So even if you get a hot inflation print, it's probably not going to take that off the table. But I think from an investment perspective, we have to have some realism that the market is pricing in a lot of good news. I think for the next 3 months, we could be okay. But at some point, the impact of tariffs is likely to start showing through in the data, particularly inflation data. The key thing for investors is going to be seeing, does that leak through to inflation expectations? In which case, we could see a more challenging moment for the Fed. At the moment, though, given that there is a slowdown in the labour market, any kind of second round effects should be quite tame. But again, this is very much up in the air in terms of trying to understand how producers, how importers are going to be responding to the tariffs. I don't think anyone has a very, very clear idea of how that's going to go.
Yeah, and to that end, Seema, why has the long end come down so much? So, I get that the curve, has lowered, but the long end below 470 seems just a little bit optimistic, no? Given all the other risks that were out there before we got this PPI data, including things like Fed independence, the fiscal situation, the potential for a shutdown.
Yeah, I would completely agree. I mean, clearly the market is responding to the fact that there is a lot of expectation for Fed cuts over the next, not just the next 3 months, but certainly over the next 12 months, even 18 months. I think that's what's pressuring that long end. But you're absolutely right. Those pressures, those additional pressures of fiscal concerns, potential longer term inflation worries, and then of course Fed independence, those things are likely to keep coming back to pester the market. But right now the focus is on rate cuts. I don't think the fiscal concerns are disappearing anytime soon, and we also have to watch what's going on globally. If there continue to be worries in Japan, in the UK, in France, well, you could see that percolating and then adding to some pressures in the US.
Seema, I'm curious if you think that this AI rally that's been boosted by the last couple of earnings reports can continue. I know we ask this question constantly, but we're right back at our highs for most of, the AI-related stocks, or very close to them at least.
Yeah, we continue to have a positive view of these big tech companies. I mean, the valuations, they are, of course, quite frothy, but they do continue to deliver on earnings. So, from our perspective, this is a long-term trade for investors. There could be certainly some volatility around this, some concerns creeping in here and there. But ultimately, particularly if you're going into an economic slowdown, what investors really want are those companies with the strong balance sheet, the positive cash flow, pricing power, kind of reduced competitiveness. Those are all things that these big tech companies are presenting at this point. So we continue to like that, but we do acknowledge that there could be some volatility as you continue to see maybe some of the earnings numbers not displaying as much strength as we've had in the last 2 or 3 years.
Seema, we have to leave it there. Thank you so much. Seema Shah of Principal Asset Management. Now, let's get an update on the headlines overnight. Authorities still searching for the killer of prominent conservative Charlie Kirk, who was shot dead during an event at Utah University. President Trump spoke yesterday after the killing of Kirk, who Trump counted as an ally.
It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree day after day, year after year, in the most hateful and despicable way possible.
For more, we're joined now by Bloomberg's Rosalind Matheson. Ros, what can you tell us about the latest in the search?
Well, as we were saying earlier, we know that they initially did detain someone who was later released, and the latest from the authorities is that, a suspect, the perpetrator of this, is still at large, and so we don't know anything about them, obviously, their background, their motivation or whatnot. It does seem to be, from what the authorities are saying, quite a professionally carried out operation, though. And obviously, in the backdrop of all of that is the question of, Kirk's role very much within the Republican machinery, someone who was really an accelerator for the Republican Party, for conservative views and politics, by energizing young people, both college students and even school students. And his business really, his group really expanded over the years. Millions of followers on social media, podcasts, lots of chapters on campuses, and his frequent appearances there. And so really an important part of the machinery for Donald Trump into his election recently, and also obviously coming into midterm elections in the US. And so there's a lot we don't know about what was behind this attack. You heard Donald Trump's comments a minute ago, saying that he feels that Kirk was demonized by what he calls the radical left. But we are in an environment as a whole in the US where discourse has gotten a lot harder, it's gotten a lot more complicated, and you have very strong views on all sides of the coin.
Ros, thank you so much for joining us. That is Ros Matheson there. Now, 2 other top stories trending on the terminal this morning. Alibaba is leading a fundraising spree among Chinese tech giants, driven by soaring capital demands and AI competition. The company is seeking to raise about $3.2 billion in an offering of zero-coupon convertible notes that's set to be the year's biggest. Used car seller and subprime lender Tricolor has filed to liquidate in bankruptcy. Didn't give a reason for its collapse in its filing. U.S. prosecutors are also looking to allegations of fraud by that company. South Korea's president said a U.S. immigration raid that led to the detention of more than 300 South Korean workers has unsettled companies pouring billions into the United States. The workers were dispatched on short-term stays to install equipment and got caught up in a raid last week at a battery plant under construction in Georgia. The workers have been released and are scheduled to fly back to South Korea. Coming up, we'll bring you our exclusive conversation with Citi CEO Jane Fraser. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Talks ongoing between Washington and Beijing. Defense Secretary Pete Hegseth's call with his Chinese counterpart potentially paving the way for a Trump-Xi meeting. For more, let's bring in Bloomberg's Brendan Murray, who tracks global trade for us. So, Brendan, what do we know about these particular talks between the defense chiefs?
Yeah, I mean, this looks like one more step in the direction of a summit in coming months between President Trump and President Xi. A lot of diplomatic discussions have to take place, and both sides have to agree on the positions that each country is taking, especially when it comes to the defense issues around Taiwan and the naval movements in the South China Sea. So a lot of these issues, China will want to hear the U.S.'s perspective on, and vice versa. So this is laying the groundwork for something that Trump has wanted for months now, and that is he's already got the invitation to Beijing. But the actual summit date itself has not been agreed upon. So what we're seeing is the sort of diplomatic dance, if you will, to make sure that an eventual summit has all the elements, particularly that China, as the host of it, would want to put on display for the world.
And of course, there is an opportunity coming next month as well, right? The president could potentially sort of bump into Xi.
Yeah, exactly. There's a regional development meeting going on in Korea, I believe, where that could potentially happen. President Trump would likely make other stops in Asia if that were the case. So none of that has been publicly disclosed, but that's what the speculation is, that the president would go on to a place like Japan or some other allies and show that the U.S. is engaging with some of these big trading partners.
Let's move now to the report that Mexico is planning some tariffs on China and also some other Asian nations. What do we know about that, and whether it's to placate the United States in any way?
Well, Mexico is planning to put a big 50% tariff on Chinese-made vehicles, particularly electric vehicles. Those have been flooding into Mexico in recent years because they are blocked in other places like Canada and the U.S. and the European Union. So Mexico has been a big market for Chinese-made EVs like BYDs, and now with the USMCA renegotiation talks kicking off over the next several months, Mexico wants to be on the right side of President Trump on this, and not to be seen as allowing Chinese, very low-priced Chinese-made vehicles competing with American vehicles that are essentially built with supply chains that stretch from Canada across the U.S. and into Mexico.
Brendan, thank you so much. Brendan Murray covers all things trade for us. And I do want to mention a headline crossing the Bloomberg just a moment ago. Qatar will host an emergency Arab-Islamic summit on Israel's attack. Once again, Qatar has decided to host an emergency Arab-Islamic summit on Israel's attack. Now to a Bloomberg exclusive. Citi CEO Jane Fraser spoke with Bloomberg's Jumana Bercecci on her outlook for the U.S. economy. Have a listen.
You've got to look at the collective impact of the tax policy, what's been happening with tariffs, and indeed the increasing deregulation that we're seeing. And they work together as a package. I think the most important piece for a corporate: clarity. We hate uncertainty. We like clarity. And our client base now is really starting to act with more confidence now that we've got clarity on those three fronts. So active in the capital market arena, in financing, much more active in investing, less sitting on the sidelines. And M&A has been very, very active indeed, as we talked about. And on the consumer side, pretty robust spending through the summer. And we saw that really across all categories, helped a bit by lower gas prices. But the consumers being fiscally responsible, being more mindful around some spend, but still the spending levels were very pleasing.
So the momentum was pretty strong across all lines of your business in the second quarter. Of course, I don't want to precipitate the upcoming earnings, but can that momentum continue into the end of the year, just in terms of what you're seeing in advisory, in deal making, and in trading? Because it was a very strong quarter for trading as well.
It was exceptional for us on all fronts. I still see very strong pipelines. I see high level of engagement from clients. I see a sense of urgency as well, given the speed with which industry structures are changing, and there is still growth opportunity. I think growth will be a notch lower. We're keeping an eye on the labour market. It's a low churn market. So not everything is rosy, but we don't see a recession on the horizon.
So Citi increasing, global bank, obviously establishing here, your presence over here as well. But at the same time, we talk about multiple geopolitical shocks. At the top of the show, we were speaking about the latest Russian incursion into Poland. We talk about geopolitical risk over here. We talk about tensions between U.S. and China. As a bank, how do you navigate all of those potential geopolitical sensitivities and the barriers that are going up around the world?
We're in doing business in about 160 countries around the world. We have local banking license, people on the ground in almost 100. And we've been in many of these countries for a very, very long time. So this isn't classic suitcase bankers fly in, fly out. There's a really deep knowledge of what's going on. And a lot of the services we provide are what help the economies and the companies do business every single day. So for us, there is a mission to make sure that we are operating with resiliency and with rigour to support our clients. And we tend to move activity around the world as clients ebb and flow in different geographies. So the Middle East is probably on a rip for the next decade or so in terms of how much investment and new industries, new clients coming in. Other areas we'll probably see some more diminishment in. So we flex where it is. Our people are globally minded. They move around the world as to where opportunities are. And it's a moment where Citi shines, where there is volatility. The clients need us.
Well, Middle East, a rip on the next decade. That's a good headline, Jane. I do want to bring it back to an article that Bloomberg published a couple of weeks ago that Citi had hired an external counsel to look into some allegations that were made against your global head of wealth, Andy Sieg. You've not commented yet on the outcome of these investigations. Are you satisfied with the outcome?
Look, I gave Andy a very clear mandate when he joined Citi, which was to transform our wealth business. And I'm very pleased with what he, the team and the business have achieved in terms of transforming it. If you look at our investment revenues really since the beginning of the year, they've really outperformed. They've been very strong. We have a terrific team, and I'm very comfortable with the direction that we're going.
Citi CEO Jane Fraser is speaking exclusively to Bloomberg's Jumana Bersetti. Some breaking news now. The UK ambassador to the United States, Peter Mandelson, will leave his role effective immediately. This is according to a minister, Stephen Doughty, who was speaking in the House of Commons. Once again, UK ambassador to the United States, Peter Mandelson, is going to leave his role with immediate effect. This, of course, after a scandal involving Peter Mandelson and Jeffrey Epstein and the communication between them. Once again, the US ambassador from the UK, Peter Mandelson, is leaving his role with immediate effect. Coming up, the ECB decision and CPI on deck will get you all set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead today, and boy, are there a lot of catalysts, particularly in the 8 a.m. hour. ECB rate decision coming at 8:15 Eastern Time. That, of course, followed 30 minutes later by President Lagarde's news conference, 8:45 Eastern. But in the middle, it's that all-important US CPI print. That's at 8:30 Eastern. Plus, we get initial jobless claims data. We'll be watching those very closely too. And then some more quarterly reports. We get Kroger before the bell and Adobe after the market close. Let's look at some micro movers now. Open Door co-founders Keith Raboy and Eric Wu will rejoin the board and naming Shopify's Kaz Najatian as CEO. Oracle extending gains after its eye-watering surge in yesterday's session, another 1%. Adobe rising ahead of earnings after the market close, up 2.4% there. So let's take a look at the overall picture because, there's a lot of good news to be priced in out there, and we see futures doing just that. In fact, the Nasdaq 100 just notched a record very, very slightly yesterday. Oracle also helping things out, not the Nasdaq, it's not a component, but it did have a halo effect on all of the AI stocks. We have the euro just slightly weaker versus the US dollar. A lot of catalysts there, of course, not much happening for the dollar before the CPI print, but we do have the press conference at the ECB expected to stay on hold, in fact. Let's take a look at yields because not that much movement, but it is a little bit instructive that we're seeing the 30-year yield below 470, so tiny little bit of a curve flattening. I mean, very, on the margin, but still it's worth noting. And we do still have the 2-year yield at 354.36. Traders trying to price in a third rate decrease this year. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.